रात को. I have seen your message in the night, during the night, and today itself I'll forward it. Don't worry. Because I saw it very late night. I saw it, I think, right close to 12:30. So today in the morning I'll forward it. Audio and video, everything is perfect. Should we start? Okay, let's start. Any doubt in the previous class? Let's start. So till yesterday we did 4 of the principles. The 5th principle over here is cost principle. Right? The next principle over here is cost principle. Now, what do you mean by cost principle? Cost principle says that whenever an organization is investing in asset, what is asset? It is income generating unit. What is asset? It is income generating unit. So, as per a cost principle, whenever an organization is purchasing asset, any cost incurred, any cost that is incurred to bring this asset in working condition will be added to the cost of asset. Correct? Do you remember this principle? So cost principle simply says that whenever we purchase an asset, whenever an organization is going to purchase an asset, all the costs that we have incurred in order to make this asset in working condition will be added to the cost. Right? Now, the cost concepts require that all assets are recorded in the books of account at their cost price, which includes cost of acquisition, transportation, installation, and making the asset ready for use. So all the expenses that have been incurred to make this asset, right, or to bring this asset in working condition is called as cost principle. Then full disclosure. This concept requires that all material and relevant facts concerning the financial performance of an enterprise must be fully and completely disclosed. Now, the principle, full disclosure, what does it say? All the material facts that might impact the financial performance of an organization. So, any information, right, which relates to or which might impact the financial performance of an organization. For example, the fraud. Right? For example, if there is some fraud in the organization that was reported, will that be disclosed in the financial statement? Very good morning, everyone. That should be disclosed because such frauds frauds are a big thing, right? They might impact the financial performance of an enterprise. So these should be disclosed in the financial statement. And what do you mean by financial statement? What is the meaning of financial statement? Though we will deal with this in detail today, right? So financial statement means your profit and loss account, your balance sheet. Then additionally, auditor's report, explanatory schedules, notes on account, cash flow statement. These comes in your financial statement. Correct? Then, basic accounting concept number 3rd for the day. Right? Revenue recognition. Now, what do you mean by revenue recognition? Revenue means sales plus other income. Correct? Revenue means sales plus other income of an organization. Correct. Now, what will come under the category of other source of income? What will come in other source of income? Sales तो होगा ही ना. How it is possible that there is no sales? It could be dividend, it could be rent. Very good. It could be dividend, it could be rent, it could be commission, it could be royalty, it could be interest. Right? Altogether, this comes in the category of revenue. But here they're saying the concept of revenue recognition requires that the revenue for a business. Now, what is specifically revenue for a business? Revenue for a business would be sales. That is the operating income of an organization, right? Sales is the operating income. What do you mean by operating income? Income that is directly related to the business, correct? Ravindra, the time is fixed. If you are an English medium candidate, it is in morning 7 a.m. If you want to study it in bilingual, it is 9 p.m. There is no other timing. There are two timings only. So this is for English batch. This is for bilingual batch. Right? Now, we are not talking about profits. We are only talking about sales, Deepen. Right? Here we are talking about revenue recognition. So this will be the revenue for a business is specifically sales, the core activity, also called as operating income of a business. So when are we going to record sales? Right? It will be recorded whenever the transaction is done or the invoice is made. Now, why are they telling us this concept? So when you talk about sales, there are two types of sales. There is cash sale and credit sale. Right? There is cash as well as there is credit sale. So when you have cash and credit, both sales are there. In that particular situation, cash sale will be recorded immediately because obviously it is, you got fund at the same point of time. But what about credit sale? Credit sale means buy now, pay later. Right? Credit sale means you're buying it now, but the amount will be paid later. Correct? So when it is buy now, pay later, so will we record it when the payment would come? No. The revenue recognition concept says that we will record sales whenever the legal right, that is the invoice is made. Maybe the payment might come after 10 days, 2 months, 3 months or 7 months, but the sales would be recorded on the same day when the invoice was issued. Correct? Next one, matching concept. The concept of matching emphasizes that expenses incurred in an accounting period should be matched with the revenue of that period. The matching concept says that income and expense should belong to same period. Right? Income and expenses, they should belong to same period. What does that mean? Income and expense should belong to same period. That simply means if this is a year, right, starting from 1st of April ending to 31st of March, the income and expenses of the same year should be taken. Correct? Now, there is one more thing. Do you remember the term depreciation? What was depreciation? It is decline in the cost of asset, value of asset basically. And why there is a decline? Because we have used it. Correct? So because you have been using this asset, there has been a decline in the value of asset, right? That is called as depreciation. Now let's take an example. Let's say you have purchased an asset as on 1st April 2014 for rupees 4 lakh. for rupees, let's say 5 lakh, right? Life of the asset is 4 years. Now you sold this asset after 4 years for rupees 1 lakh. What is the amount of depreciation? Four lakhs. Correct. Now this depreciation will be charged in 2018, or will it be spread equally in each and every year? It will be spread equally. That means if you are saying that entire expense, depreciation is a cost, it is an expense. If you're charging the entire depreciation in year 2018, you are going against which rule? You are violating the matching principle. Why? Because matching principle said that the income and expense should belong to each year. Now, as per this principle, we have used machine starting from 2014 till 2018. As a result, this depreciation should be, for example, let's say equally allocated from this year to this year. I hope this is clear to everyone. Correct? Next one. Next one is consistency. Now, what do you mean by consistency? To be consistent means to be regular. So all the rules and regulations should be followed consistently, or should be, we can change them every year over the period of time. So consistency says that the rules and regulations, the accounting policies, they should be followed without any break. They should be followed regularly. There should not be any break. I hope this is clear. So the concept says that the accounting policies and practices followed by an enterprise should be uniform and consistent with a period. Correct? Next one. Conservatism. Now, what do you mean by conservatism? Also called as concept of prudence or prudence concept. Correct? So this concept requires that the business transaction should be recorded in such a manner that the profits are not overstated. Right? That means, what does this method means? It says that you cannot record profits which are notional in nature. So you cannot record notional profits. What does that mean? Notional profit means future profits which have still not occurred, right? Future profits. Profits that will happen on some future date. Till date, we have not earned profit. This might occur in the future. So this concept, the prudence concept says you cannot record any profit that has still not, you have not yet earned till date, but you will earn it in some future date, right? If there is some profit that you have not earned till date, but you will earn it in future, you cannot record such profits. These are called as notional profit. For example, if I say that if I will sell my, let's say mobile, I'll get 10,000 rupees as profit, right? But this will happen when I'll sell the mobile. But I am not selling it right now. So that profit is notional profit. Profit that might occur in future. But till date, there is no profit, right? So prudence concept says you cannot record notional profits, right? But what about notional loss or future loss? It says that in case you feel that there is certain contingency, you might face any loss in that particular situation. What will happen? You will have to make provision for it. Is it clear? It says if you record the profit, no, you're overstating your financial statement, but making provision for loss is not overstating or understating your financial statement. Very good. S. Kumar, Shruti. Everyone, shall we move ahead? Next one, materiality. Just 1 minute. Okay. So next one being materiality. What do you mean by materiality? Any information that is likely to influence the decision of an investor, right, should be disclosed or should be shown in financial statement. Now my question is, what is the difference between materiality and full disclosure? What is the difference between materiality and full disclosure? A video I have closed purposely. It is coming over here now. Tell me quickly. What is the difference between full disclosure and materiality concept? Very good. So when you talk about full disclosure, it says something that is impacting the financial performance of an organization. Right? It talks about the financial performance of an organization. Right? But when you talk about materiality, it is talking about investor or creditor. Right? So materiality means something with respect to with one particular person. Right? Now here, for example, if I say interest rate in banks have increased, loan interest rate. right? Loan wala thing that has increased. Now, will this be reflected in full disclosure concept or material, where it should be disclosed? Very good. So when you say interest rate, this will come under the material principle, materiality. Is it going to impact the financial performance of an organization? Increase in interest rate? Do you think that is what bank would do every year? He would keep every year 10 times in a year they increase or decrease the rate of interest, right? Will that be reported every time that in a year from a 360, from 365 days, uh, 10 times, 20 times you have changed the rate of interest, right? Or it is material to the, it will not be disclosed to all the pain. It is not a financial, why? How will it impact the financial performance of an organization? Tell me. If interest rate is increased, that is a good thing. How can it impact the financial performance of an organization? People should know, then it is materiality, no? When people should know, right? It will influence their decision, but how it is going to impact the financial performance of an organization? Then, if you yourself are saying people should know, that means it should focus on material fact because it is going to influence the decision of one or two people, right? Or all the people who are the creditors to the bank. Debtors to the bank. Correct? So materiality says the difference between materiality and full disclosure is full disclosure talks about the financial performance, whereas materiality talks about one or two stakeholders of the organization. Is it clear? Then the last one, objectivity. What do you mean by objectivity? Accounts should be prepared free from the bias of accountants and others. That means no personal bias can be, added while preparing the financial statement. It should be strictly as per the facts and data available. You cannot add things on your basis. Is it clear? Correct? So, and the last one here is basic basic accounting concept. Number last is dual aspect concept. It is the last one, right? Now, what do you mean by dual aspect concept? Dual aspect concept says that in accounting, every transaction impacts two accounts. Every transaction in accounts will impact two accounts. What are these two accounts? For example, if I take one example and I say organization has purchased furniture. If an organization purchases furniture in cash, it is going to impact which two accounts? It is going to impact furniture and your cash account. I have in chat, I've shared you a link. That's the place where you can ask your doubts and queries. Right? You can connect with me over there and we can discuss all the doubts you have. Any issue you're facing. Right? Post the classes are over. Right? There's no platform to connect, so you can connect me over here. So furniture and cash. Correct? So that is what dual aspect concept is. Dual aspect concept says that every transaction impacts two accounts. That is, every debit in accounting has a corresponding credit. Every debit has a corresponding credit. Correct? And because of the dual aspect, the accounting principle, the accounting methodology came into picture. That is, which one do we follow? Single accounting system or double accounting system? Double accounting or double entry system. Is it clear? Now, the accounting equation is asset is equal to liabilities plus capital. Now, when you say asset is equal to liability plus capital, this equation is also called as balance sheet equation. This equation is called as balance sheet equation, which simply means that the asset in the organization will either be funded by owner's fund or liabilities, outsider's fund. Correct? Is it clear? Right? Borrowed asset? No, there's no borrowed asset. There is asset. You need money to buy asset. You can put your own funds called as proprietor's fund, owner's fund, shareholder's fund. Correct? Or you can purchase an asset from loan. So that is called as liabilities or outsider's fund. I hope that is clear. Correct. Next one. Next topic. What are the various details that are considered by bank? Right. Why? Okay, lease rentals. Then you have to pay lease rentals for that. No, that is an expense. That will come in expense. No, we're talking about asset, income, and liability. Asset, capital, and liability. We aren't talking about expenses and income. Sharad, is it clear? Right. So, what are the various details that are considered by a bank while approving a loan proposal? Can you tell me few details? So, if an organization or an individual approaches bank for a loan, what will be the various criteria or various details that bank would ask for or bank would search for while approving the loan proposal? Very good. It's a CIB class, and before you started the classes, I would request you to once go through the syllabus so that you don't find this difficult. Again, also do remember to watch the class that was conducted on 9th December in the morning so that you have an idea what are we doing in these classes. Income proof, okay. Are they very good? Single entry system is not used. S. Kumar. Okay. So these are correct. So these are the layman words that we are using. Sybil score, collat, all these are correct. Right. So I can see Rana Das sir, Adil Bashir, all of you are answering. S. Kumar. But all these are what? All these are layman words that we are using, like Sybil score, future projections, collateral offered. But what are actually the financial terms used in these respect? Number one, net worth of an applicant. Right? Net worth of an applicant. What do you mean by net worth of an applicant? Very good, Deepen sir. So I think whatever you have said will come under the category of repayment capacity. Right? So you cannot track the willingness, but ability. The person should have ability to pay the loan. Correct? What do you mean by the net worth? It is excess of asset over liability. Right? What is net worth? It is excess of asset over liability. Right? Net worth means shareholders fund. Right? It means shareholders fund. You could hear her voice, Ankur sir. She's fine. She's just crying because she didn't see me in the morning. I think she woke up right now and she could hear my voice. So shareholders fund, right? Shareholders fund means owners fund. Right? So net worth of the applicant means what is the actual uh, capital that has been introduced by the owner. Right? Then repayment capacity. What is the ability of an individual or an organization? Are they capable enough to repay the debt? Right? Then viability. What is the viability? Viability means viability of a project. How? Okay, so when you are taking a loan as an organization, you are investing into some project. How viable is this project in terms of technology, managerial skills? Who is leading this project? Right? What is the tech? How it is to the economy? All this will be considered under the viability of a project. Right then, availability of unencumbered securities. Availability of unencumbered securities. What do you mean by unencumbered? Collateral free securities. Collateral free securities. Right? So what the securities, collateral free securities means all those securities which are free from charge, so that you get an idea. Huh. Jamela free securities or debt free securities. Very good. So these are the various points. So again, we will be discussing them in our main class also in length and breadth. Just telling you all the basic words. So unencumbered means security which is free of charge. There was no collateral against this security. Right? Is it clear to everyone? I hope you are understanding whatever I say. Is it everyone? Could you give me answer? Okay. So two people, Priya ma'am, Balaji, Bindu. Example of what? Shrikant sir, example of which one? Unencumbered securities. Okay. So let's say you took a house and this house is collateral free. What do you mean by collateral free? This house is not kept as collateral while taking a loan. This is an unencumbered security. Unencumbered means which has no charge, which is not kept collateral anywhere. Right? Now here, a house that you have kept collateral, this is not an unencumbered security. Is it clear now? Next one. Financial statement. We'll be talking about financial statements. Now, when you talk about financial statement, what does it include? So there are three types of basic organization. There are manufacturing organization, there are service organization, and there are non-profit organization. Now, what do you mean by manufacturing organization? So manufacturing organization are which are involved in production of goods. What is service organization? Which are rendering services. And non-profit organization which are not formed in order to earn profit. Ma'am, this would be more now as per the new syllabus, it would be your module C. And this will come under the chapter analysis of financial statement. Module C is all about credit, right? How will you or how credit is provided. So what are the various options that banks will consider while providing loan? All this is covered under your module C, which is credit. Okay. So now, when you talk about manufacturing organization, right? So manufacturing are the one which are involved in the production. So the organization which are involved in production, for they will prepare profit and loss account and balance sheet, right? Now, are you aware with the term profit and loss and balance sheet? Though I will be covering this in the next class in detail. What is profit and loss and balance sheet? We'll be covering in detail in the next class. But if it is a service organization, we will prepare receipt and payment and balance sheet. So in an organization which is not involved in manufacturing, there is no trading and there is no P&L, right? So for them, it is receipt and payment. Like in banks, they don't prepare profit and loss account. Rather, they prepare receipt and payment account. Correct? Then non-profit organization. Okay, service organization, they have their objective to earn profit. What is the objective of bank? To earn profit, right? So this is the difference. The objective over here is not to earn profit. Here the objective is to earn profit. नहीं, manufacturing में P&L होगा, right? Because there you will be purchasing raw material, you will be selling the raw material, right? So that is why the word over here there is manufacturing. In case of manufacturing, you prepare P&L, the same, right? The same thing, but the new name is receipt and payment, right? There is no sales. You render services, professional income. And in case of non-profit organization, you prepare income and expenditure. and balance sheet. Now, will only these two things come in the category of financial statement? No. So additionally, there are other documents also which comes under the category of financial statement. One is auditor's report. What do you mean by auditor's report? Auditor is responsible for inspection and verification. Right. Inspection and verification. So the auditor would go and give the organization a report that could be clean or that could be qualified. It could be a clean report or it could be a qualified report. So that will also help us to analyze the financial statement. Who? Bank. So bank would check the auditor's report to check whether there is any special comment that bank should take care of or not. Then explanatory schedules, right, where there will be disclosures. Right, that will also be seen whether there is condition, any restriction. Notes and accounts, coming up with details, whether there was any related party transaction. Do you remember accounting standard? Related party transaction, segment reporting. Right, so that will come under notes on account. Then, as per accounting standard 3, all those companies which are listed or in the process of listing in any recognized stock exchange or whose turnover exceeds 50 crore, they are required to prepare cash flow statement. Right, so they are required to prepare cash flow statement. What is a cash flow statement? That is related party transaction. Cash flow statements actually tells us about the complete inflow and outflow of cash. I hope it is clear. So for the purpose of your extra doubts, I've given you a link. You can connect and you can join over here so that we can discuss the doubts. Related party transaction means any transaction that you had doing with a organization that you know them personally, right? So if any organization you're aware or you know about them personally and still you're doing a transaction, you have to give a detail about it, right? That this transaction that I've done from the related party, what is the price quoted in the market, what is the price that I have paid for it, so that there is no fraud, there's transparency. Everyone, is it clear? Yes, Vishali ma'am, I already had words with the management with respect to that. There were 2 such cases. Then, who are the users of financial statements? Last topic for the day. Who are the users of financial statements? The users of financial statements are called as the stakeholder. So, all those candidates who are watching this session on YouTube, this is the last free live video that you can see. From tomorrow onwards, there is no free demo, right, of the session. In case you want to continue with the classes, you can enroll in the CAIIB paid program, right? The links of the batch is available. In case you want to enroll for English medium batch, the link is given, or complete comprehensive package, that is Mahapack. The links are given. All these are available at a discount of 81% till 10 a.m. in the morning today, right? And double validity on Mahapack, that is right now 12 months altogether. In order to enroll, you can just click on the link, use the code Y183, make the payment and be part of this batch, because from tomorrow onwards, all these free sessions will not be available, right? Also, the sessions that you have missed will be provided in the recorded form. Okay. Now, users of financial statement are called as stakeholders. Right. Now, creditors and lenders, investors, government, rating agency, all those people who hold interest in our organization are called as stakeholders. They could be internal and external. Is it clear? Yes, this is the English medium batch. Bilingual is in the evening. Is it clear to everyone? So any person, right? So who will be internal stakeholders? Employees, management, all these are internal. Who will be external, like government, customer, creditor, investor. Employees will be internal. Okay, right? So public. Okay, so these are two, internal and external. Is it clear to everyone? How are you finding these beginners classes? How do you find these beginners classes? Is it helping you? Right, so it's like a complete revision of what you have studied in your JAIIB or any new word that you would come across in your CAIIB. Correct? Okay, so here we'll end our session for the day. Tomorrow we'll continue again. Right, so thank you for joining in the session. If you enjoyed this class, if you like watching this class, once I close the session, you will get a feedback form. Right, do not forget to give your feedback so that we can improve. Okay, thank you everyone. Take care.